How many of you out there get excited talking about insurance? Probably nobody. None of you probably do. Well, there's a new player to the market recently that is called Lemonade, and they're a new insurance company that is trying to make insurance fast, easy, and affordable, and even attractive. And what they're doing is they're going to try to get you a policy within minutes, where Geico might take 15 minutes. And this is a peer-to-peer business, so usually a lot of insurance companies, especially the old traditional ones, they work with agents. So you have a customer reach out to an agent, and the agent goes out and gets you coverage with some insurance company. Well, this is the customer directly to the insurance company dealing with each other. They are all on the app. So you can think of, they're the Robinhood of insurance, right? You just do everything on the app. They don't have a physical location. Everything is on the app. But let's see what types of insurance they offer. So right now, they offer renter's insurance, homeowner's insurance, car insurance, pet insurance, term life insurance. So they have 5 different insurances that they offer, or they call them lines of business. And so recently they just started to do the car insurance side of things, and they're trying to get rolled out into all states. But with insurance, you have to be licensed in every state and approved to do business in that state. So it's a very kind of slower process. So they're starting to roll out. So they're probably in a few states, and will eventually try to get into all states, but not all state insurance. But let's look at the CEO of Lemonade and what he has to say about the car insurance side of things.
But this is actually not good news for them. If you have a huge book of business, tens of billions of dollars invested in pricing people to some kind of average, then this technology is disruptive to you, because what it suddenly shows is that about 2/3 of your customers are paying too much. And the last thing you want to do if you're Warren Buffett is give a 30-40% discount to 2/3 of your customer base. And then you discover that the other third are being subsidized by them. They're paying too little, and you need to raise rates for them. And then you get churn and you lose the business there as well. It's a damned if you do, damned if you don't value proposition for incumbents. But for new companies like ours, without that kind of legacy, this is truly transformative, allows us to price in a very accurate way to match rate and risk in a way that the industry doesn't really want to.
So they're trying to make insurance fair and accurate. And how are they doing that with their car insurance? Well, they're going to be tracking your phone, and they're going to be probably connecting something to your car to see your driving habits. So they're really trying to get as much information as they can about you related to their car insurance so they can accurately price you. And I really do like this. They kind of have to get buy-in from people to allow them to do that. But overall, I think as far as pricing, it's very fair, because a lot of insurance companies, they go off of an average. So you have a few policies that have very costly claims, and the premium should be pretty high. But then you have all these other policies that have very small dollar claims or no claims at all, but they're going to price everyone at an average, because that's just the best way that they can do it at this point. So you have a lot of people that are going to be paying more than what they should. Where Lemonade is trying to change that and make it very accurate. So how does Lemonade work as a company? Well, as you know, when you get insurance, you have to pay premium for that coverage. Well, they take all the premium from all their customers and they put it into one pool, and we'll just say one account, think of it. And what they do is they'll take 20% of that, and they use that for their operating costs and reinsurance. Now, reinsurance is insurance for an insurance company. Yes, insurance companies have to have insurance. And I am an expert at reinsurance, so if you guys want a video on it, just comment below. I'd be happy to make one. So they take 20% for their operating costs and reinsurance, and then they take a big portion to pay out claims out of that pool. And then any remaining premium, if they have any, goes out and towards a charity. They call it the give back policy. And I think that's really neat, and that's definitely attractive, especially this day and age when a lot of people are looking for how companies give back to the community or in the environment. I think with their car insurance, they do some tree planting thing. So it's really great, and I think that's going to get them some customers just by doing that. So as said, this company is 100% digitized. You can only do things on the app. You can only get insurance on the app. You can only file a claim on the app. And there's no agents involved like traditional insurance. And this really does keep overhead costs down, so that's a good thing for this company model. And it's very much more straightforward than a traditional insurance company. what they do is they invested in artificial intelligence. Lemonade calls it AI Gym. So if I file a claim, AI Gym could go in there and pay my claim within, like instantly, basically. And that's pretty awesome. Except there's kind of a catch. Only 30% of their claims are paid this way. Why is that? Is if you have any knowledge of the insurance industry, claims can get very technical. There could be legal stuff involved. They can get very complex. And so AI Gym is just handling those easy, quick claims, basically. And they're probably using algorithms and questions that people answer and stuff like that. But in the big picture, they'll never be able to probably go to 100%. It might even shrink less than 30. It's just very complicated. Claims can get very, very complicated. So only 30% of their claims are paid by AI Gym. And then, when I first started looking at Lemonade, I thought, gosh, this seems like there's a lot of opportunity for fraud, right? You can get insurance quick, you can file a claim and get paid quick. Well, there are 18 anti-fraud algorithms that they use, plus there's some claims executives that are constantly reviewing claims, which is good, but I have some caution here, right? Recently, Zillow used algorithms to go in there, buy homes, flip them, and then be able to sell them for a profit. And they relied on the algorithms to find those deals. Turned out their algorithms were wrong, drastically wrong, and Zillow made just huge losses on this. And it kind of bruised the company. And it's been hard for them to accept that we failed at this. We relied on algorithms. But the problem is, algorithms, no matter what you try to use, you can't predict the future. And so I think with Lemonade, they have to be very careful because if something goes wrong with their algorithms, it can be costly for them depending on what it is. So I just have some caution to put up there. And so now let's look at their stock. How's their stock been doing? Basically, not very well. Why is that? Well, so far with Lemonade, their revenue has not been strong as promised. They're not profitable yet, and that seems a very far out thing until they're profitable. Their loss ratio is very high. Now, a loss ratio is basically saying for every dollar of premium that we get in, how much are we paying out for losses? So let's say a loss ratio is 110%. That means for every dollar of premium that comes in, they're paying out $1.10 in losses. So they're not making money. Where if their loss ratio was like 50%, that means for every dollar coming in, they're paying out 50 cents in losses. So their loss ratio is very high, and they say that it's due to the deep Texas freeze last year. So they're paying out a lot of claims in that. So the thing with insurance companies that you have to know is most insurance companies are not profitable just by their premium versus their loss that they pay out on claims. Most companies pay out more in losses than they do in collecting premium. So how do they become profitable? Well, a lot of insurance companies use investments. So they invest their any excess money into different types of investments. So, property, stock market, bonds, you name it. And that's how a lot of insurance companies make money. So what I'm going to say is I'm not bullish on this stock. I'm actually kind of bearish. And here are my reasons why. Number one is insurance is extremely competitive. You have a lot of big name companies out there like State Farm, Allstate, Progressive, Geico. And at any moment, because they have this, built up business with probably a lot of profit and surplus, they can afford to undercut Lemonade and go in and price lower, right? If they see, let's say their renters insurance division of their company really booming, they can go in there and say, well, we're going to charge way less than you, and we're going to try to stop that so it doesn't kind of go to their other lines and they become this, huge competitor. So these big companies can afford to do that, and that's where I kind of put some caution. Number two, and probably the biggest reason is, Lemonade has this new innovative model, but most all other companies, remember, disclaimer, I work in the insurance industry, most insurance companies out there are doing the same thing. They're replicating and designing and creating their own Lemonade platform service, right? It's something that's not that hard to replicate, right? Especially on those easy claims or those easy policies that are small dollar and pretty, cut and dry. are creating their own lemonade businesses, right? So people can go in there and get insurance quick, get file claims quick, and all that stuff. So there's really nothing unique enough about Lemonade that these other big companies can't replicate, and they are doing it if they haven't already. And so I think there's just a lot of cons with that, and that's the main reason why I'm not going to invest in Lemonade and why I'm actually bearish. A third reason is they're not profitable yet. It takes insurance companies a long time to be profitable, so they have a lot to prove. And if they don't become profitable, you know, at a certain time, they're going to have to raise their rates and they're going to have to go against what they, are built on. And so I think that is a big risk as well. So insurance companies, the most important number to them is their surplus, and that's their excess revenue if they ever have any. That's the profits they make from investments, and they save this aside, and that's called the surplus. And that is very important because if an insurance company goes out of business, the surplus is there to say, if we go out of business, we can cover all the claims we have open now. We are able to pay them all out. All these people are safe, right? But if you don't have enough surplus, if you got a business, some of those claims might not get paid, right? And that is not good for the customer. And so you have rating agencies that rate insurance companies like AM Best, and the higher the rating, the better. And that surplus number is a huge part. The higher the surplus for an insurance company, the safer that insurance company is, because if it for some reason goes out of business, they want to assure that the customer will still get that claim paid out, right? So that's an important part of insurance. So I'm just worried that them not being profitable yet and their revenue not being strong and it being a very far out distant future that they're expecting until they might become profitable is concerning to me. And I think that that's going to be a big struggle for them. Because these other companies have had decades to build up strong financials. Number 4, people don't change insurance very often, right? It's not like you're going out to the store and you're excited to buy stuff. Insurance is one of those things that people dread, and once most people get it and they just keep it, they just put it on auto renew, and so it's going to be very hard, I think, for Lemonade to really grow their business at a fast, consistent rate for years and years. They might do well in the short term, right, growing their customers, but it's still going to be difficult. Insurance, it's not sexy, right? It's not something that people look forward to getting. And people aren't changing insurance very often. So I think that's another reason why I'm very bearish on Lemonade. To me, you see all those catchy commercials out there, right? Jake from State Farm, the lizard from Geico, Liberty, 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 Liberty. It sticks in your head, it drives you nuts, right? After you see that commercial. So Lemonade, they're going to have to come up with something like that, because right now, unless if they're not really focused on my area of the country or my state, I don't hear nothing about Lemonade. I only know of it because I work in the industry. I don't have friends or family that have insurance through them. I don't ever see advertisement. So I think they have a long ways to go in that area as well. And so the marketing is huge for insurance because it's not sexy. It's not something that people go out and get. So they have to get their attention through those very corny commercials or jingles, right? Another thing to mention is insurance as a requirement. So for many things. So, Lemonade has gotten 1.2 million customers since they, their business opened up a few years ago. But you have to remember that it's not like people are going out because they want to buy it. It's not like going to get an iPhone. It's because they have to get it. And so that is kind of something that I struggle with is, you got all these customers, but, that's because it's required. It's a must. But what part of your business is actually because people want it, they like it? That's going to be a hard measure, and for us to read as well as investors. So for me, Lemonade is a 50-50 thing. I think they have a 50% chance of doing well and becoming a successful company eventually, but I think there's a 50% chance they don't do well, and eventually this company is either bought up because it's struggling and not being, it's ready to go under, or some regulatory body has to take over and they just aren't, a company anymore. And so for me, at the end of the day, I am not going to buy Lemonade. I don't think it's a long-term investment for me. In the next couple of years, I think they can, have some peaks of interest from consumers. But long term, I just don't see this as a company that I'm willing to invest in and take the risk on, because I think there's just a lot of wins against them that they are going to have to go up against. And so, with that said, that's what I think of Lemonade. I love what it's trying to do. I love that it gives back to the community and the environment. But as an investor, I think this wouldn't be a very smart investment in my opinion. I just think there's a lot of things that this company has to achieve in order to get to that point. And I rather, you know, maybe revisit this company in a year, maybe even 2 years, see where they're at before I would invest in them. But I think with all these other companies creating their own lemonade, apps, it's there's too much competition. There's too many other big insurance companies that lemonade. Yeah, this is innovative and different, but these other companies are doing it now too. So what really, is your claim to fame at that point? So with that said, guys, I hope you like this video. I appreciate your viewership. Please subscribe to my channel. I'm trying to get these videos very regular. You notice I've been doing them very often now. I'm going to start doing some more fitness videos too, as this channel is finance and fitness. They're both very important, in my opinion, why I made this channel. And so I hope you guys have a great day, and we'll see you next time on Mark's Finance and Fitness.